So ETFs have become very, very popular in the investing community, and for a good reason, right? An ETF, which we know stands for Exchange Traded Fund, which broken down into simpler terms really just means a fund or basket of companies and stocks that have been handpicked, and they've been handpicked to fit into one singular investment. So it's literally a one-stop shop for diversification, because you're giving your money purpose in that with that one investment, okay, you become a shareholder and part owner of a broad range of stocks with one investment. How cool is that? Now, the key piece that we all seem to miss, or that we miss, at least early investors miss, the key piece of investing in one specific ETF over another typically breaks down to what is inside of each ETF and their weights, right? So there's just about an ETF for every sector that you want to focus your investment in. And today we're taking a look at one of the most popular ETFs in the market, VYM. VYM stands for Vanguard High Dividend Yield ETF, and there are approximately 450 different companies within this particular ETF across 10 various sectors of the market. So let's get into this and find out what exactly is inside of this Easter basket that is VYM. And I want to start with the sector allocation breakdown so you know what parts of the market your money is being invested in. So starting with the top 10 holdings, or actually let's start with the sector weightings, okay? We have financial services at number 1, right, with 21%. So that means if you had invested $100, 21, okay, $21 out of that 100 will be going to financial services. You have consumer defensive at $13, okay, a little over 13%. You got healthcare coming in at 12%, industrials coming in at almost nearly 12%. You have technology coming in at 10%. You have energy coming in at 9%, almost 10%. You have consumer cyclical coming in at 6.75%, utilities at 6.34%, communication services at 3.83%. You have basic materials at 2.23%, and then you have real estate with a 0.01%. So if you are investing in VYM, it should be noted that you are not investing into real estate. Into this for real estate, okay? You're gonna have to find that somewhere else. You have to find that with your common BDCs like O or AGNC or something like that, right? But real estate is only at a 0.01%, so you're not getting that when you're investing with VIM. But let me tell you what you are getting. Let's look at the top 10 holdings, okay? And again, Vanguard High Dividend Yield Index Fund ETF. This is VYM, okay? At the top, you're getting AVGO, which is Broadcom. Broadcom is a widely known network and company. This is a business that has been operating for decades. They are very, very profitable, and they are very, very widely known. AVGO is a stock that is well known in the market. A lot of dividend portfolios seek to have Broadcom in it because of their ability to survive through different climates in the market, where we're in a downturn, whether we're in an upturn, it doesn't matter, okay? Broadcom is one of those companies that you can see being around for the foreseeable future just because of how heavy they are in the media entertainment market. And we know media right now is king, all right? JPM, JP Morgan Chase is the next highest weighted on the top 10. You got Exxon Mobil. We all know about oil and gas and how important that is to our economy, right? J&J, Johnson & Johnson. We know all about Johnson & Johnson. They have several brands out here. One of the greatest companies in the world, one of the biggest companies in the world with a wide moat, right? PG, Procter and Gamble, another huge company. Home Depot, the leading company in home improvement, the number one, and it's not really up for debate. The Home Depot, that's at 2.49%. Again, in that top 10. You got Merck and Company Incorporated at 2%. AbbVie, I love me some AbbVie. I have them as a singular stock in two different portfolios right now. But AbbVie, love that company at 2%. You got Chevron, again, oil and gas. We know all about that. As much as they try to get rid of oil and gas, they just can't seem to do it, right? Shout out to the EV market. And WMT, Walmart at 1.66. And I love Walmart for obvious reasons, the low pricing. But Walmart is a giant, okay, in the consumer market. It's just a giant, okay. And I have them as a dividend. I have Walmart itself as a dividend paying company inside of my dividend portfolio over on Public. So these are your top 10s, okay? This is your top 10. This is what is inside at the top. These are the heaviest weighted assets that they have. This is really what you're buying, okay? This is at the top of what you're buying when you buy into VYM. Again, over, I believe, 450 different companies, but this is what's at the top. This is where the bulk of the majority of your money, this is where it's going, into these 10 companies right here. All right. So let's move forward, and I want to go over the expense ratio. The expense ratio for this company for owning the ETF is 0.06% for VYM. Now, for those of you who don't know what an expense ratio is, it's basically how much you're paying for this to buy and hold VYM. Because it is an ETF, and because it has companies within it that have to be actively managed by a team of people that look over this and decide what goes in and what comes out. No one is doing that for free, okay? This is not charity work here. It takes money to pay people, to pay scouts, to pay people who analyze the market and who analyze different companies. It's going to take money to pay them to do that. Nobody is just doing it because they just love stocks and they love the stock market so much, right? They got to get broke off. They got to get their piece of the pie as well. So it's going to cost you, the consumer or the owner, the investor, 0.06%. So every $1,000 that you spend, you're going to end up paying at least $6 of that I hope I did that math right. You're going to pay about $6 in fees, okay? That is going to go what is called into a expense ratio, all right? I want to put this up on one of my favorite websites to use. Again, this is not a promo for them. They're not paying me to tell you this. Stockanalysis.com. You can find out a lot of information. But I want to go to the overview. And that $118 price, a lot of people are going to look at that and say, well, that's a little steep for me, right? But again, we all have access to partial shares, and if the company, or in this case the ETF, has companies within it that are, one, widely known and widely popular and widely successful and have a history and performance of success, then I don't mind paying a higher price for it. Now the question is, what is the intrinsic value of that, right? Are we overpaying? That's the question. Are we overpaying for this particular ETF? And a lot of people feel it's a different type of way about it. It depends on what kind of investor you are. As a value investor or as a growth investor, you're gonna wonder about that, and you're gonna look with a finer tooth comb, and you're gonna go over this with a microscope. You're gonna be a little bit more attentive to that price point that you're paying right now than a dividend investor would. Us dividend investors, we typically don't tend to care what the price is at any given point. It typically doesn't matter. Why? Because we're not investing for growth potential. Is it nice to have that? Absolutely. Would I love to have both growth and the dividend payout? Absolutely. That is a dividend portfolio's dream scenario, right? We would love to have both. But are we initially, as a dividend investor, primarily investing in something like VYM for the growth, No, you're investing for the dividend because that comes first. At the end of the day, we just want to get that check. We want to know that we have the stability going forward in retirement, in our old age, as we get older and stop working our jobs, our 9-to-5s. We want to have that steady income. Right. So again, it all depends on what type of investor you are. So at 118, as a dividend investor myself, I'm not really too concerned about the intrinsic value here. I want to know, am I getting the bang for my buck as far as the dividend concerned, or is there something else, something better that my money could go to where I could get a better return for it? Right. That's always the question as an investor. So I went over what is inside of this already. I went over the top 10 holdings, which are over there, as you can see, and their weights. I do want to go and let's click on their performance over the last, let's say, actually, no, we'll get to that in a second. I want to go to their dividends. So go to the dividends. So the dividend information is here. VYM has a dividend yield of 2.93% and is paid $3.48 per share in the past year. The dividend is paid every 3 months, so this is a quarterly paying dividend stock, and the last ex-dividend date was December 8, 2023. So you can see here, see how much they paid out. It was a little bit over $1, maybe $1.09, almost $1.10, and that was last paid in December. Okay, so again, this is a quarterly paying stock. You can see the payout ratio is at 47%. That is pretty good. I want to go over and talk about comparing this to other ETFs. Okay, maybe I'll do a second video for this because I don't want this one to be too long. I kind of like these videos to be kind of short and to the point. But I just want to show you the performance over the years of this company. Let's go back here and look at the max. Okay, so at the max, on the max chart, you can see that this started back in 2006. So this is a company. This is an ETF that has been around, that has a history of proven success. Look at that beautiful trend line right there. Look at that. That is typically what you want to see when you're investing in an ETF. That is absolutely what you want to see. And you can see that dip there. Of course, we all know what that 2020 dip is. It was the pandemic time, right? That was the time where America was in a crisis, right? But if you just look at the broad scope of this and look at how this thing has performed, up all time 134%. That is amazing. Last 5 years, up 37%. That too is amazing. No matter how you look at it. Let's do the last year. Last year up 14.21%. So again, if you bought this within the last year, you have likely made money on this. Year to date, up 6.63% on nearly 7%, right? And on the month, up 5%. So again, it's all green, man. This is what you want to see in an ETF. Because you don't, as a dividend investor, you do not want to have an asset that is in your portfolio that will cost you money on in the long term, right? You get in those steady dividends, but the intrinsic value of the stock is going down. That's not what you want, right? So we want to at least capture both of those, and I think VYM is certainly doing that with the holdings that they have. Again, these are some of the top of the top. All right, these companies that are in here, and you can go down and see what else is in here. You go beyond, you can see Bank of America, you can see PepsiCo, Coca-Cola, McDonald's, love McDonald's stock. You can see Cisco Systems. All of these are companies that I do not have. I would not mind singularly. I would not mind owning singularly by themselves, right? Comcast, Wells Fargo, Intel, Verizon, Amgen, Qualcomm International, IBM, Caterpillar, Pfizer. This is all stuff that I would not mind owning singularly. So how much better is it that you can get it all wrapped up into one neat bundle now with VYM? Again, if you're looking for an ETF that focuses on technology, this is not the one for you. There is another one that focuses on technology, and we'll go over that in another video. But thus far, the VYM has been performing quite well. And I think that's, I think I'm going to cut it here. I think we've done enough. I think we've gone over quite enough. Now, in the next video, I think I'm going to compare VYM to SCHD. And SCHD is one of those popular stocks that has recently, over the past 2 or 3 years, actually, with its popularity, has really gone through the roof with investors. Within the investing sentiment, right? So I think I'm going to compare that next. But so far, this is what you're getting with VYM. I hope this video has been somewhat helpful in any type of way. Make sure you leave a like and subscribe on your way out the door. And make sure you come back tomorrow for more plays of the day, where we just share information, we share knowledge, we share our growth, we share our returns. I have no problem showing my portfolio. That's coming up. Matter of fact, I'm going to start doing that every Friday. I'm going to show my dividend portfolio that I am building, that I started last year. Started building it from scratch. Right now it is at about $6,000, a little over $6,000. And we're just going to continue to build that throughout the year to get that passive income. And hopefully you are along for the ride. Hopefully you found some type of value in this content. And I'll see you all in the next video. Thank you for watching. Later.